Hey guys, Andrew from Stock Money Lizards. Hope you're doing great. It's been a while since I've done a video, mostly because I think the price has been more or less on the upside. Everyone's been saying it's going up. A lot of bullish news going on, but now we're consolidating at the top, and people are a bit unsure as to whether we're going to correct down to 49.50k or maybe remain in this area a little longer or maybe push upwards. So I found this really cool chart pattern. It's called flags high and tight. Basically all it is a situation where you have an asset that doubles in value in less than 2 months. It consolidates in a range that is less than 20%, with some exceptions where it's allowed to go in between 50 and 25%, but the best consolidation range is between 0 and 20%. It has to stay there for between 3 to 5 weeks. So in that situation, what happens is you get a breakout or a doubling of the asset over in less than 2 months. So between mid-February in this case to April, you then consolidate in that range, tight range of 15%. The tighter the range, the better. And then what happens is you go parabolic, and quite parabolic. So you go from 30 to 120 in this particular case. And in the book he goes, when a stock doubles in a short time, it usually takes a breather and consolidates. When it does, it gives the trader the opportunity to buy the stock before the rise resumes. And so it makes quite a lot of sense that Bitcoin is doing this at the moment. I'll just open up the chart, but before I do that, I just want to read a little bit more. So here goes that this guy O'Neill discovered this kind of pattern, and he said he's looking for a doubling of the stock price in less than 2 months, a sideways move of 3 to 5 weeks during creation of the flag. This 3 to 5 weeks is not set in stone, and it's drifting no more than 20%. So the guidelines eliminated many patterns, and basically this is a very rare and very bullish pattern. So this is why I wanted to make a video about it, because the characteristics of this chart pattern are that it essentially has to see a rise of at least 90% in less than 2 months, find consolidation where price pauses in the prevailing uptrend, and the volume needs to go down and then start to spike basically as the increase in price starts. So this rise over here from 38,000 25th of January to 14th of March 73,000 is basically an 89.69% increase in price over 50 days. So that satisfies this high and tight pattern. We're consolidating with quite tight in quite a tight range of 17%, and what it says is that it should break out by at least 70%. So 70% takes us to around 120,000, which does make sense. However, we do need to get out of this range, because we have been in this range for how many days? Let me just get rid of this. We've been here for 39 days. So 39 days is cutting it close to that 3 to 5 weeks. But we're right there. It's possible. So if I just zoom in a little bit on this chart pattern, basically what happens in the situation is you have institutions that buy up, and because they buy up, they don't want to sell straight away on this initial pump, and they wait for higher prices to sell at higher prices. This was the reasoning outlaid in the book. So yeah, in this particular situation, this is the 90% we just identified. The numbers are the TD sequential, just to help us indicate where we are on the momentum side. At this point, we're consolidating over here with 1, 2, 3 touches more or less on the resistance and 1, 2 on the support, with a lower low compared to the previous. And now we're sitting on a 3 above a 2 above a 1, which is pretty good. Means that momentum is starting to maybe rise. So what I'm hoping for is a nice 4, 5, 6 day, a nice week this week. It's important to have a good week to see if maybe we can break out of this 70k range and then 72k range. As it stands, if you look at volume is going down, which is one of the caveats. So volume trend is downwards. Okay, so that's a good thing. It's volume trend is downwards. Percentage 90%, average rise is 70%, change after trend ends is 36%. So maybe we do get that 36% downgrade after we get to 120,000. So yeah, I think that this is satisfying the criteria for a HFT chart pattern, which is the one we're talking about now. And if you look, so what I did was I said, okay, let me go to the past and see what's happened in the past. And there are many situations where this has happened. So back in March of 2020, we had a rise of 104%. It took us 48 days to get there. We spent 75 days consolidating in a range of less than 20% at 17%, and then what happened is we took off and we 5x'd. Okay, this is normal in high and tight flags, that price goes up so exponentially. That is the reason why it is such a good and bullish and rare chart pattern. So this is why I thought I'd make a video about it. In this case, what happened was we went up, we broke out above it by circa 23%, and then we fell back below to find support at the consolidation, and then we took off, and this took 253 days to happen. If we go, and this was a bull market. I mean, the bull market started here, after the pandemic crash. So if you look here now, and this was when we were in a bear market, so price, I mean, arguably we were still in a bear market because of this downtrend. But technically the end of the bear market was here at 18 December 2018. But anyways, so here we went up by 97%. We took 53 days to get there. We have to take less than 2 months to get there. We have to consolidate in a range less than 20%. We did that. It took 29 days, and then we went up by roughly 56%. If we go, let's go to the bottom now in 2017. So in 2017, here we went up by 231%. It took us 81 days to get there. Here we consolidated back down by 38%. What this basically means is that everything can be adjusted, in the sense that whilst the caveats are that you must stay within that 20% range, there's also a kind of way you can trade it that it can be between 25 and 50%. So this held too, and it took 56 days to go from here to here, and then a breakout of 169%. Then what happened was you had a correction of 37% again. You had 44 days of this consolidation phase, and then you had a breakout of 300%. But keep in mind that from this price, so before we were just looking at this move, this 231% move. If we looked, this is more of the kind of phase, the kind of flag that I'm seeing, where we broke out by 169% from the lows. We did it in less than 2 months, 50 days. We consolidated by 37%, which is okay. Took 44 days to break out, and once we broke out, we went up by 3x, you know. So there are many situations where Bitcoin does this, because here what's happened at the moment is we've broken out by 90%, just still quite strong if you think about it for an asset that's in the trillions now. We've taken 50 days to get there, so that was great. We're in that 15% range, 70% range, which is less than 20, even better. And now the question is, how far up do we go? So if on average we move by at least 70%, that should take us to around 119,000, which makes sense that this pump would take us to about 190,000. Then maybe we consolidate, or maybe we actually push 3x or 5x or however much it can. This can happen in this particular rare chart pattern, and it takes us to a total, maybe a high of 278,000. And if you go back, in this particular case, it took us 253 days to get to the high, arguably even longer. So what I did was I took 253 days, more or less, from now. Like, I'm not giving it that much time to do this, and that take us to about January. My battery is dying, so I'm a bit stuck. I have to end this video. But yeah, so that's what I think is possible on the price. If we do break down, then I expect that we'll probably find support at 53,000, which is this sort of base and support line over here, and then yeah, we'll grind back upwards. So this is all very quite possible at the moment. A lot of bullish news just happened, halving took place and everything. There are a few videos on YouTube, so I suggest if you're interested in the tight flag, go and check them out. And so pretty bullish at the moment. One more thing to back up this 3x, if you go from this high down to this high, then you can see that this could be a cup and handle with a very small handle, and at the moment, and the length of the cup is 3x, you know. So if you put 3x over here, 300% also comes in at 280,000. So I think there's a good chance that if Bitcoin gets to 280k, maybe that will be the end of the cycle, even though everyone's calling for 1 million. And I think the first form of resistance once we break out at this level will be 120k. Cool, guys. Have a good day. Ciao, ciao.